Welcome, you're watching BQ Prime. I'm Tamanna Inamdar. Today, we're talking with the management of Mahindra Holiday and Resorts India, who's put out their Q2 numbers. Mr. Kavinder Singh, the MD and CEO, is with me. Mr. Singh, thank you so much for speaking with us. Let's first dive straight into the numbers before we get to the big picture and what we're seeing in this business. H2 is typically a better year. You have World Cup, holiday season, etc. coming. But let's look at what happened in Q2. So I'm going through the consolidated numbers year on year. Revenue was up 9.51% at 655 crores. EBITDA was up 16.84% at 136 crores. Margins at 20.76% versus 19.46%. Net profit down 48.22% at 21 crores versus 41 crores. Now, these are the consolidated numbers. Let's start with that net profit figure. Mr. Kavinder Singh, what details can you give us about it? Because I saw your investor presentation and a lot of your markers have hit the highest for second quarter. So if you can just explain to us in detail what those net profit figures are and why we've seen that drop.
All right. In a way, you have captured the what I was going to say, but let me give a little bit more details. If I look at quarter two at a standalone level, we had the best ever total income, EBITDA, as well as PBT. We saw significant growth in terms of percentage on YOY. For example, EBITDA moved up by 17% and PBT was up by about 15%. Our resort income was up by 4%, even though there were landslides and rain affected resorts. Despite that, the resort income was the highest ever. And if I were to move further down into the consolidated results, even holiday club results were good. They have delivered 1.6 million euro positive EBITDA, which is something which, given the current circumstances, the fact that there is a Russia-Ukraine war going on, the fact that in Europe the interest rates are high, it turned out to be a very, very good performance, relatively speaking. What has happened, however, if you were to look at below the EBITDA down to the PAT, there have been some one-off forex movements. There is a loan that we have in the overseas subsidiary when we bought the holiday club resorts, and there is a 9.5% depreciation if you were to look at YOY in the rupee versus the euro. As a result of which there is a significant one-off movement of forex, which is not a cash charge, but it affects the P&L. That is one reason that has affected the PAT, or rather even the consol PBT. And if you were to remove that, the consol PBT, if I were to look at, was last year 42 crores, this year it's at 32 crores. So the gap comes down significantly. Now, the reason we are down even after removing the one-off, which is the forex, is largely due to the depreciation and financing costs. As you would know, that the Euribor has gone up to 4.15%. Last year, Euribor was barely about 1.5–2%. So the borrowing costs have gone up, which has affected the numbers when you look at even at PBT level, because they are above the PBT. And the other thing is there have been some depreciation that has happened as a result of the inventory acceleration that we have done. But broadly speaking, forex and most importantly, Euribor rates, which affected the numbers as you keep going down from income to EBITDA, down to PBT and down to PAT. So this is the story. And the good news for us is that the cash at the standalone level moved up by 40 crores on a QOQ basis. And we added 53 crores to the deferred revenue pool in the balance sheet in Mahindra Holidays. So overall, a very good quarter operationally. Yes, there were these one or two issues that I highlighted, and that is what affected the consol PAT.
Okay. Let me come to some of your PPP projects, and there is, some excitement around this. There's already an announcement of a project in Uttarakhand, I believe. Can you elaborate on the plans for this kind of a pipeline and why this seems like a good idea at this point? What is the revenue share? PPP projects, and I'm not just talking about in your space, but generally in India, can sometimes be a hit or a miss. So why are you confident about this, sort of revenue stream or this direction for the company?
what I want to share here is that PPP is triggered by our Honorable Prime Minister's, Mr. Modi's vision of taking tourism on mission mode. He's also gone on record to say that he would like the tourism economy to be $1 trillion by 2047. So we are seeing the state governments are wanting to, and they have tourism department corporations, almost all of the states, and they have some fantastic properties. So last year, we were very encouraged when Himachal government approached us to look at a resort in Mandi district, a place called Jhanjeli. We looked at it, we bid for it, we won it, and in 9 months, the resort is operational. Because the resort was built, it had to be finished. So sometimes you get a time to market advantage in PPP. And most importantly, if we were to look at, taking land, building on our own, which we are doing and we will do more of it. But these things come in as additional benefits because the land comes in prime locations, reasonable costs, long-term leases that we sign up. For example, Odisha government, just in the first quarter this year, they have awarded us in principle approval for a 50-acre land in Chilka Lake. Now, this is one of those most beautiful places which we would take years to get land and then build because you need to get approvals. So here the government is proceeding with single window approvals for us, and therefore we should have a resort in Odisha soon. And then we did the same thing with Uttarakhand. In Uttarakhand, we did 4 to 5 resorts. We have committed, we have identified 4 to 5 pieces of land, and we are saying we are willing to do 1,000 crores of investment. If I were to also mention to you, even in Maharashtra government last year, we got the sanction to build the MTDC Harihareshwar resort, which is actually built but not fully built, and actually make it even bigger. And that's an area that we are still working with Maharashtra government. It has taken us some time. But these are 3-4 examples of how various state governments are working very closely. There are many more state governments who are interested to work with us. Very recently, in this quarter in October, in Andhra Pradesh, also we have announced 750 crores of investment in the 3 locations that we are working very closely with Andhra Pradesh government. So PPP is actually very simple. Either we get a land or we get a resort. Land on a long-term lease with single window approval so that we can quickly build the resort, and which will be for a 90-year lease or whatever, and at a nominal rental. And that creates a great opportunity for us so that we get time to market is faster. Because I am sure you are aware that we have taken a mandate from our board that we will actually move our keys from 5,000 to 10,000 keys in 6 to 7 years.
Just to understand, sir, on these PPP agreements with various states, with Odisha, Maharashtra, and Uttarakhand, is it the same model or does it differ state to state in terms of revenue share? Is it a simple lease? How is it working out?
So every state works differently. In some places, it will be revenue share. In some places, if it's land, it will be leases. So it really depends on the state. It really depends on how the RFP is built. And the government does take inputs from all the players, and everybody gives the inputs, and the government decides what they want to do. And we are open to all kinds of arrangements, because one good thing that we have is that wherever we go, we are able to build occupancy because of the membership model that we have.
Yeah.
That's something that an advantage that we have. And therefore, the state knows that we will have 80-85% occupancy, which means we will truly build the resort. We will have very high occupancy, and that's what states want.
Thank you so much, Mr. Singh, for joining us today.
Thank you. Thank you.